Hello, this is the Chart Profit video, Friday 11th of May, just over 2.5 hours into the trading day. This is the pre-open today. We're looking at the E-mini S&P. On Thursday the 3rd of May, down here, this dashed line at the bottom here at 25.95 is the value area low of the 7-month distribution for the E-mini. First positive we saw was a very quick rejection of that test. Following day I marked aggressive buying here, and that day that aggressive buying approached but didn't exceed the important level, the 12-month controlling price at 26.72. We oscillated around that for a couple of days. The following day, Wednesday the 9th, the session made low exactly at that level very early on. Again, I marked aggressive buying later in the day, and yesterday, Thursday, again I marked aggressive buying, and two value areas now printed above that important level at 26.72. I said yesterday that this indicates that buyers are back in control of the day frame, and critically, as long as the E-mini holds above 26.72, it is in a strong price location. Let's quickly show you this. This was last week, this section at the end here. This is the spider weekly structure, I call it, from the ebook. Most of these weeks across the range here we've designated as no bias. The last sellers active week was back here in March, which was this week here. But this week, if the spider closes above Wednesday's high, which I would think it likely will, this would be the first indication of buyers active on the weekly time frame in 15 weeks. Okay, this is the spider chart. Spider has to close above this level to give us that positive structure we just spoke about, and you can see here's the important level 266, the 9-month on the spider. As long as we hold above that level, it's in a strong position, and we're seeing evidence of active buyers here. Markets, indices all over the place getting overbought. But as long as the spider holds above this level, it's in a strong position. And as long as IWM, the Russell 2000 ETF, holds above 153.50, the 1-year controlling price, it's also in a strong position. Possibility of this chart breaking out to new highs here. European indices have been relatively strong. This is a FTSE 100. It's closed up here, close to the high of the week. This is the German Dax Index. First level of support on here is the halfway point down here. We're now quite a bit above the first important support down here, which is the 2-year. This is the S&P regular contract commitments of traders data. We've spoken about this recently. The net commercials position is out at a 2-year high here. This from last week's ebook. Data through Tuesday of this week coming out later this evening. This is a public poll from AAII. Bulls percent was slightly higher this week, 33.5. Worth noting that 4 weeks ago it fell to 26.1%, the Bulls percent, which was the lowest since September. Bears percent was also a little lower this week, 25.5%. That actually reached 42.8% 4 weeks ago. That was the highest since March 2017. And if we look at the net, the Bulls minus the Bears, that's at 8. But that fell to a negative 16.7 4 weeks ago, and that was a 2-year low. So 4 weeks ago here, significant bearish sentiment. These are contrarian indicators. This is the Investors Intelligence poll, the newsletter writers. Again, 4 weeks ago particularly, we had some significant bearish readings. Bulls percent fell to 42.2% 4 weeks ago. That was the lowest since November 2016. Red histogram at the bottom here is Bulls minus Bears, and I look at the 4-week moving average of that net position, that black line, and currently that is at 24.4, and that's the lowest since November 2016. Look at my version of the Ridex ratio here, slightly higher yesterday. I said here on Wednesday the ratio fell significantly on a strong day for the market, and as I wrote yesterday, this is usually a short-term bullish indication. So there was the reasonably strong up day for the market, and at the same point the ratio fell to multi-day low here. This is TLT, the T-bond ETF, as we know, printing below the major significant level at 121. So this is all quite a weak position. Price back above 121 would put bonds in a really strong position again. Currently, chart's finding resistance at the halfway point off this low to the subsequent high. It comes in on this dotted line here, so we can see the resistance here. 6-month move to 118.50 recently. If we see price printing time below that level, we'll probably see a retest. Don't want to make any assumptions about which way the chart's going to go, but I know that price back above here, 121, would put it in a strong position. USO, the oil ETF, still strong. The first sign of weakness would be time below 12.79, which is the 12-month. GLD, the gold ETF, at the end of this week has recovered just about back above 125.23, which is the 4-month. It's interesting if it can hold that level. Just a couple of days after that major migrated down from up here somewhere to 89.54, we saw the dollar index rally quite strongly, but as I say, just 2 or 3 days here of weakness. In April up here, the pound tested the previous high and was immediately rejected, broke back below the 6 months at 139.65, and then broke the long-term support trend line off the low over here in 2016. It's quite a decline, and pound sits in a weak location here. Might be a bit of a bounce. It's getting a bit oversold, but it's a weak location. Euro FX chart, the major, as we know, up here somewhere, migrated to 123.30. Major migration like that often precedes a directional move, and that's certainly been down since then. Support is at here, 117.55, which is the 1 year. Those two majors, one on the dollar index, and here kind of the inverse of that on the Euro FX chart, putting the dollar index in long-term strong position and this one in a long-term weak position. Okay, that concludes the video, and once again, thank you for watching.